Well, thank you for staying with us. This is Business Nigeria. Trading activities on the floor of the Nigerian Stock Exchange declined on Tuesday, making investors lose 200 billion naira amidst the recent naira depreciation against the dollar at the foreign exchange market. According to the market cap, it shed 200 billion naira or 0.35% to close at 56.167 trillion naira, in contrast to 56.367 trillion naira recorded on Monday. In another important development, Nigeria is projected to slip the fourth largest economy that's in Africa in 2024, behind South Africa, Egypt, and Algeria. Well, that's not from me. It's International Monetary Fund forecast for April 2024. Nigeria, which has held the title of Africa's largest economy since the GDP rebased in 2013, is projected to have a total GDP of $253 billion in 2024, primarily due to the devaluation of the currency. Let's continue this conversation. Managing Director, Chief Business Officer, Optimus by AfriInvest, Mr. Ayodeji Ebo, joins me to break this down further. Mr. Ayo, it's good to have you. Good afternoon, and thank you for joining the program.
Yeah, good afternoon, and thank you for having me.
I think we should start with this big news from the market as we see that investors lost about 200 billion naira, but it's ascribed to naira depreciation against the dollar in the foreign exchange market. Can you tell us how this comes to you and make us understand what it means?
Okay, thank you. One, we need to know that market is seasonal, and news also has significant impact on our market. So one of the major factors that we've been seeing that have been impacting on the market is the recapitalization news, as well as the expectation of Q1 results. You know, the deadline based on the NSE rule, the Security and Exchange Commission rule, that 1 month after the quarter, you must publish your unaudited quarterly results. So we're expecting that from next week, a lot of companies will be publishing their results. And looking at being specific to the banking sector, which accounts for over 45% of liquidity and activity in our market, the recapitalization is expected to have dilution effects on shares. So investors are already pricing that in. What that means in simple language is that the number of shares that will be available to investors, so if the recapitalization is successful, will be more. It means that the ability to pay dividend would be tougher because they will have to pay more people. So dividend may be less. And in terms of earnings per share will also be less. And once you have, it's a market of demand and supply, where you have more shares in the market, it will cause also a decline. Secondly, when you check the result of most of the banks, you would also observe that for most of the banks, there's FX and revaluation gains that most of them booked. Some of these may be reversed in Q1. So when you look at the revaluation gains on their fixed income assets, then last year yields were really very low. But now that we've seen that yields have improved, when they do a mark to market, it means that the revaluation gain that they booked would be reversed, and that would have impact on their result. Secondly, on the FX, it's also going to have impact. They've been able to book significant FX gains, and with the appreciation we're having now, and some of their positions, it may affect, when you look at their total comprehensive income, it would also affect, it will have impact on that. So you would see that there's a flurry of negative news, which is impacting on, which will have negative sentiment on the market. So that's part of what is affecting investor sentiment. But I would always say that for investors, you need to, if you are a player in this market, it's when prices are trading at very attractive rates that you invest for the long term in good stocks that have strong fundamentals. So it's not a major cause for concern, but it's also an opportunity to acquire stocks at very good prices for any major rally in the medium to long term.
A good way to start this conversation, in-depth submission from you there, Mr. Ayodeji. But with the current monetary policy rate, many are worried, and of course inflation is also well above 32% with what we have. We hear investors complaining seriously about dividends undercut, that's by poor purchasing power. Do market regulators hold advice for equities investors whose incomes easily crash?
Okay, a very interesting question. So I'll look at it from two perspectives. I think there's one factor that I think I missed out, which is your question is also touching on, that is affecting the downward trend in the market, is the current interest rate environment. You know, there's an inverse relationship between the fixed income market and the stock market. Now, dividend yields are becoming unattractive. So if I know that if I invest in treasury bills and I can get a yield of over 20%, there is no incentive for me to put that money in stocks. So what we're also seeing from some of our customers now is that they are moving their funds, rotating from the equity space to the fixed income space, given the yield they can get. Average yield in the market, you check, is less than 10% on the average. So, and you also now consider the risks that comes also with stocks. So, investors are trying to also to rotate their stocks.
Let's move on quickly, you know, because this market thing remains very, very important. But let's touch on the rebasing figures that are shown that Nigeria now is number 4 across the continent when it talks about the how is it called now, of our economy. That's the looking at the quantum of what our economy shows at this time. We see that we are now after Algeria, Egypt, South Africa. That is where we now have Nigeria. Many will say this was expected, but I would like you to take us through how we got to this point.
Okay. Yes, so I think based on the comparison,
yes,
the comparison is done in dollars. So when we look at Nigeria data in Naira, in domestic currency, you look at it in current terms, you'll see in Naira, I think it's about 234 trillion Naira and December 2023. And you also, if you look at it in constant terms, that's factoring in inflation, it's around 77 trillion. So, but because our Naira has devalued, so if you are going to compare to other countries, you have to bring all those countries back from their own currency to dollars. But if those countries, their currency is not devaluing significantly against the dollar, it means that if we're currently looking at our own currency, that there's been close to about 60-70% devaluation in the last year, that would have impact. It means it's going to discount our value, GDP value in dollar terms by almost that amount, even if it's by 40%. So you see that impact that it will have. So in dollar terms, yes, it's going to, our GDP in dollar terms will shrink significantly. But when we look at it in Naira terms, we expect that there should still be continuous increase, given some of the initiatives that government is also putting in place. Look at the expectation for GDP, at least, yes, while we are still at sub 3%, we are still expecting that it will grow. We're not expecting a decline. But by the time, if we now have significant devaluation in our currency, so even if we are doing very well in Naira terms, and we're going to compare to other currencies, if our own currency has depreciated more than those other currencies, it means that would be worse off in terms of comparison. So that's like, it's based on a calculation. We like to always want to be like the giant of Africa, but I feel that rather than looking around, looking within that space of competing based on ranking, what are the things we need to look inwards that our growth rate will be significantly higher than the rate at which our naira is depreciating? So if we're able to achieve that growth rate, it means we'll be expanding faster than which our naira is depreciating against the dollar, and we will be able to get to that level if we want to be the giant of Africa. So there's a lot of work for the government, their work will be put out for them, a lot that we need to do. And to get to that level, we need to be able to begin to manufacture, add value to some of the items we just export, raw materials, create a lot of jobs, expand our economy. Insecurities, some of those low-hanging fruit that gives confidence for people to come and invest in the country and expand it. So if we don't embark on some of these things, we'll just see that in dollar terms, our economy will just be shrinking. And even in naira terms, we said for us to be able to have all-inclusive growth, we need to grow above 5%. If not, we would be growing, but we'll have more people going into the poverty level because we are growing at a faster rate. The resources is not growing at that level, and that would mean that in terms of cost of living, standard of living will keep dropping.
Another interesting one. But with what we witnessed now with exit of quoted firms from the market, do you think that is good for the market? And with all of these reforms being introduced by this administration, do you think the expected investors' confidence will come back to Nigeria?
Yeah, I think I would think that the investors' confidence, if we are consistent with some of the measures that we're already putting in place around the FX, because to attract foreign investors, we need to be able to provide liquidity. So if we continue, we are sustaining it so that we don't begin to build backlogs. When people come in, yes, whether it's managed, whether it's floating, when they want to go out, they're able to exit the market as at when they want to. So that is really very important. And once we keep that consistency and build that trust, they will have more of the FPIs also coming to provide the short-term liquidity. While we're working on the FDIs, that is foreign direct investment, and long-term capital that can sustain and can support even our naira, and we leave the government to work on, because the low-hanging fruit is oil production. Oil production still at 1.23 million barrels per day is really appalling. It means it's not improving. It means the oil theft is even increasing. So these are some of the things that will be giving concern. And when you look at the FX supply, inflow from oil still over 50%. Before you talk about remittances, talk about FPI. It can be as high, when you look at the ratio, it can be as high as even 60% in some years. So there's a need to see that we reduce oil theft for us to be able to also get a sustained naira.
Still getting more interesting now. About 3 years ago, after the demutualization process, many say what is next in line are now talking about the 3 entities now in the market.
Okay, yes. So I feel, we think that the market needs to attract more listing, which was even your earlier question, attract more listing to the, we'll see some at the listing given it's more strategic. It's like a market. What the exchange needs to work more on is if you have more people listing than those that are delisting, then at the end of the day, you have a net increase in the number of people listing on the stock exchange. Okay. This thing boils down to what are the opportunities. So if I list on the exchange, what do I tend to gain apart from visibility? Am I able to raise capital? So because the appetite is still not strong, which also has to do with the economy, consumer wallet is, you need to first consume first before you even think about investment. So that is also having that impact even on our market. So there's a lot that needs to still be done around the economy, such that if people are able to make more money, they are able to save, then the potential or propensity to invest would also now increase. So these are some of the things that we feel that will, of course, needs to come to place that would ensure that for potential companies coming to the market, they see that they are able to raise capital. Now looking at the recapitalization, a lot of investors are concerned. How will the market be able to raise this fund in this market? The banks, if they are going to raise their funds in this, how will they be able to raise that? Except they get the support of foreign investors to bring in funds and invest. It's really going to be a very tough one even for the banks to raise capital in this market.
A lot of talks there in one box. I must thank you so much, Mr. Ayode Diebo, Managing Director, Chief Business Officer, Optimus by Afri Invest. It's always a nice one having you break down the markets for us and happenings. Do enjoy the rest of your day and have a great one.
It's always my pleasure. Thank you for having me.
Let's take a break. When we come